Welcome to Mortgage on My Mind, where we take the mystery out of mortgages and make dreams of home ownership a reality. I'm Natalie Salins, a top 1% mortgage broker with 20 years of experience, based right here in sunny Los Angeles. If you've ever wondered about pre-approvals, appraisals, or what loan product is right for you, don't worry, I've got Mortgage on My Mind, so you don't have to. Each week, I'll bring you expert advice, real-life stories, and insider tips to help you navigate California's competitive real estate market with confidence. Whether you're buying your first home, refinancing, or just curious about how it all works, this podcast is for you. So let's talk mortgages, demystify the process, and make your real estate goals a reality. Ready to get started? Let's dive in. Hi, everybody. Welcome to Mortgage on My Mind. This is Natalie, of course. We are here today with the fabulous Ken Sisson. He is a seasoned realtor and broker associate with Coldwell Banker, actually in Studio City. He has over 23 years of experience, nearly $40 million in career sales. He is known for his deep market knowledge and integrity and commitment to delivering real results for his clients. And his expertise spans from residential to investment to luxury properties. And he shares a lot of market insights and lifestyle content through his active social media and YouTube channels. But funny enough, Ken and I know each other because Ken was a loan officer with me in a realtor office that we both used to sit together, actually. And so today I would love to discuss the idea that like kind of realtor slash loan officer, mortgage broker, like what does that mean and how he made the switch and everything like that. Welcome, Ken. It's so great to have you on the podcast and that you wanted to come on and share your expertise and info with our audience.
Yeah, thanks so much, Natalie. It's so great that our paths have crossed again. And yeah, if somebody had said to me back then when we were in that real estate office together, that fast forward, I don't know how many years it's been. Fast forward that you will be doing a podcast together and this and that, and I would have believed the part that hey, you'll be a realtor, right? But other than that, it would have been like, oh, come on, get out of here. That's not gonna happen. But yeah, no, it's great. It's great that our paths have crossed again, and we can have this time and share experience and knowledge with the audience.
Yes, exactly. Exactly. So tell me what brought you were in real estate and then made the switch to lending and then made the switch back to real estate?
Yes, so I started out relocated here to Los Angeles from New York City in 1999 and immediately signed up for real estate classes at Fred Sands. I believe it was, gosh, I believe it was like on Overland Avenue and on the west side. And funny enough, that now because Coldwell Banker bought Fred Sands years and years ago, so it's like I'm with the company that originally, in a roundabout kind of way, I'm with the company where I originally took my real estate classes. I was living with my dad. We were living in Century City in a high-rise condo, and downstairs from us was a high-end real estate agent with Hilton and Highland, and just one of the greatest guys you could ever meet. We'd see each other in the elevator, and he was the type of person that you could not help but get into a conversation with if you were in an elevator with them. And he said to me, "Hey, you're Carrie's son, aren't you?" And I said, "Yeah." He said, "What are you doing here? You know what? I heard you were moving out and this and that." And I said, "I'm getting my real estate license and I'm doing this, that, and the other thing to get by for right now." And he said, "You're getting your real estate license?" He said, "When you get it, you come work for me." That's where it all started as far as this industry for me. I worked with Stevie over at Hilton and Highland for 2 years,
Right.
and such an experience cutting your teeth on the high end of Los Angeles and Beverly Hills and Silver Triangle or Platinum Triangle real estate. Silver Triangle's in Studio City where I am now.
Oh,
But
I've never been to
but
Silver Triangle. Yeah.
yeah, yeah. It's a great little pocket area. But that's where it all started, and cutting your teeth on that segment of the market was unbelievable as far as experience goes. It was fun. And sometimes it was not so fun, but I wouldn't change a thing. And then my father was a mortgage originator, And at the time, and he had gotten so busy. It was like that first refi boom that occurred back starting, I guess, in 2001 to 2002. And I was watching him working late hours and hardly ever saw him. And when I did see him, he was stressed out. I think he had nearly 100 transactions in his pipeline. And I was
Mhm.
just like, I guess it might have been the Irish guilt. It really got the best of me. And I was like, man, I'm showing these properties in Malibu and Beverly Hills and just enjoying the drive up the coast when that's necessary and taking things kind of leisurely, and he's killing himself with trying to
Mhm.
help nearly 100 mortgage borrowers. So I told Steve, I was like, I'm gonna have to just go over and help my dad out for a while, and I'll be back. I'll be back, but I gotta help him. And 15 years, 15, 15 years in the mortgage industry. So from 2002 to 2017, when all was said and done. And it was just like I was always being pulled back to this side of the fence,
Yeah.
of being a realtor and selling residential real estate. And it was just
What's
never a good
your
time.
like what so just for the audience sake, what was your favorite thing about being a loan officer? And what was your least favorite thing about being a loan officer?
Okay, favorite thing about being a loan officer is very much
Yes.
like my favorite thing now, and that is being helpful to people, being helpful to people, being that key to their successful transaction. It's just amazing when you put it all together. It's very much like putting together a puzzle, right? So you sit down with somebody, you get all of their facts, all of their specifics, and then, of course, everything that they're trying to accomplish. And I loved that. I loved that aspect. I had so many transactions where it was just like, man, at the end of the day, they were like, the client would be left like, you were the glue that held this all together. You were
Mhm.
like, the other feedback I got was like, you were like a hostage negotiator. And I was on the edge, ready to jump off the edge. And you talked me down and you made it
Yeah.
all happen and you made it all turn out right. So
Mhm.
that's very much like how I operate today, actually. So nothing's changed there. So my least favorite part was running into people and it's just human nature, but running into people that were constantly getting in their own way, right?
Mhm.
When you couldn't get through to somebody, whether that was a client, whether that was a real estate agent, somebody who's beating on their chest for what may or may not be all the wrong reasons. They may have a point. They certainly believe that they
Sure.
have a point when they're beating on their chest. But that was my least favorite thing. It's like, hold on, if we could just somehow get through all of this, right? Then there's a solution here that
Yeah.
we can arrive at. It was probably my least favorite thing about being a loan officer, although there were a lot. There were a lot. There were the changes in the regulations, the front row seats to the
Definitely
front
keeps you on
row
your
seat.
toes.
Yeah,
Yes.
to Dodd-Frank and all of those changes taking place. Yeah, at the end of the day, I wouldn't change any of the experience for the world. It's made a huge difference in the way that I operate today.
Yeah, totally. So then with that said, because it's probably a little bit similar, even though what makes being a loan officer difficult is very different from what would possibly make being a realtor difficult. So what's your favorite thing about being a realtor and what's your least favorite thing about being a realtor?
So there's a lot of favorite things. So much like there were a lot of unfavorite things about being a loan officer, there are a lot of favorite things about being a realtor. And part of that is just getting to meet new people, getting to help them, figuring out their situations, their scenarios, what they're trying to accomplish, collaborating with the partners that are involved. And then sometimes that's an unfavorite thing. So
Yeah.
as a realtor that knows the mortgage industry, I know that I have to stay in my lane as well. And that can be hard. That can be really hard to do at times. I've had scenarios, limited scenarios, one off here or there, where a client's loan officer just didn't know what to do. Usually people are helpful. They're trying to do the right thing. But when you have somebody who's maybe only a year, maybe only 2 years into the industry as a mortgage loan officer, and they just don't know what to do. So it's, hey, I need you to tune in for a second and listen to me. Just this is, I don't want to step on your toes at all, but this is what you need to do at this point. And step by
Yeah.
step, outline it for them. And then be met with somebody who's going to accept that advice or somebody who's going to be offended, right? That they're thinking, hey, I'm not staying, but I'm not staying in my lane. I'm stepping on their toes. That's probably one of my least favorite things about it is knowing what I know, and when my advice or guidance isn't really accepted or it starts to offend maybe a partner.
Sure.
I never put myself in a position to be trying to make somebody else look bad or anything like that. It truly is coming from a place where I know what you need to do, right? To make
Right.
your life
Right.
easier, the client's life easier, everybody's life easier. But I do love it when that turns into a collaboration that leads to the answer, leads to the solution.
Hmm.
That is an amazing partnership. That's an amazing experience for everybody.
Exactly. Yeah. Yeah. Cool. And tell me, what's an experience that you've had where because you're a loan officer, it has totally saved the day because you know that side of things, you were able to like pull up the file possibly and figure out a different way to structure. And but you weren't the loan officer, but because you have all this extra background, that it helped.
Sure. I had one situation that was going to be disastrous. We were supposed to close tomorrow, let's say. And how many times does that come up? We're supposed to close tomorrow, and all
Right,
of a sudden,
exactly.
hair on fire situation develops. It's a story of our lives sometimes.
Totally.
But this was a huge one. This was a really big problem, and they were working with an online lender, one of the biggest online lenders, and
Yeah.
they were using a first-time homebuyer program. And I guess in the state of Arizona, which is where the client's mom lived in Arizona, I guess in the state of Arizona and probably several other states. I haven't come upon it in California at all,
Yeah.
but they have, what is it called? It's a deed that's filed for an inheritance. So the mom was still alive. She filed a deed. Her son and her daughter were on there that they would inherit the property. So an inheritance deed or something like that. I'm not quite sure
Okay.
what the term is.
Yeah.
So that's recorded in advance. And so the lender was doing their final check on everything, fraud check, where they do the soft pull on the credit and they do title search and what have you. And it comes down that, oh, wait, you own a home already. And it was a conventional loan that they were doing, 3% down, Fannie Mae, and for their purchase of their first home. And
Right.
we got the news that, oh, wait, we found this deed. You're on title for this house in Arizona, so you can't use the first time homebuyer program. They couldn't put more money down. They were closing with the last couple of thousand that they really had, and the lender was going to decline the loan literally on the day when they should have been signing their loan documents.
Oh,
So I got that call and it was like, okay, tell me everything that's going on. Okay, got it. And while they were telling me this, I was on title. I said, give me the address, ran a title profile for the house, ran the deed that was recorded as far as that inheritance deed. And then I said, was your mom alive? And he said, yeah, she's alive and well and living in Arizona. It's okay. Here's what we need to do, right? I'm going to call the loan officer. I'll forward a copy of this deed that I just pulled from public records because this is the
mm,
problem right here. And then
right.
I would suggest that you call your mom right now and just ask her to write a quick letter of explanation as to the house is mine. I'm still alive. It will not transfer to my son and my daughter until such time that I pass away, but I'm alive and well and I'm living here at blah, 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 and send that over. So we need to send
Right.
those things in. Sure enough, by 3 p.m. that day, we were back on track, full final approval, clear to close. Docs were going out. So we wound up closing a day late when the lender wanted to just decline the loan,
Mm,
move on.
right. The
They're
push, the
super,
desire to, yeah.
yeah, they're super highway of loan files going through. This one was like just kicked right off of it, and somebody had to step in and help put it back together if that was possible to do. And we
Right.
figured it out. We figured it out. And that is entirely 100%. Unless a realtor had the mortgage experience behind them, they wouldn't have figured that out within a matter of minutes and had everything fixed within a few hours,
Exactly.
you know.
Yeah.
So it is important. It's important to the knowledge that, and the knowledge and the experience that we've had over however many years that we've been in the industry, in whatever capacity in that industry. And in
Right.
my case, it's multifaceted, but whatever experience that we have, that's the experience that we give to the clients that we serve.
I always say the only reason I know what I know is because I messed up on it somehow. Like it's
Right.
because I have come across this as a problem and an issue that I had to solve at some point. And until you have those problems and issues, there's no real way to come across it and to learn it. You can't learn it until you've messed up on it. Because it's
Right.
really impossible. In this business, everything's changing all the time. Guidelines are changing, like things in my opinion, that's what makes this hard is staying positive and sticking with it, even when people don't necessarily appreciate all the work that you do, because all that matters is the rate, and all that matters is like getting the lowest. And to me, that tends to be like the challenging part where you're like, you just feel undervalued, and you work
Absolutely.
so hard to provide value and provide all of your experience towards the teaching and learning of a first-time home buyer or of any buyer, really. That can get tricky, but
I want to change my
yeah.
answer as far as what my least favorite thing was about the mortgage industry. I want to change my answer right now because
Yeah, okay.
you just hit the nail right on the head.
Yeah.
That was my least favorite thing about the mortgage industry right there, was when the frequency of how many people did not see the value in what you do. And what you do is it's more specialized, right?
Yeah.
And in many aspects, it's harder than being a real estate agent. In
Oh, for
many
sure, because
aspects,
you
it's
can't,
harder.
you take them through a year or two or more
Yeah,
and work with them side by side. I'm white glove. So like people text me on the weekends, at night, in the mornings, like anytime they need me. I make myself available. And then after getting into escrow, it becomes like oh, well, now we're just going to shop the best rate. And you're like, what? Like
right.
nothing I've done this entire time means anything, because you will always be able to find a chop shop who will offer you a lower rate.
There's always
Always,
a better deal being
especially
promised out
now,
there.
like online, you
Yeah.
can find a chop shop any day.
Yep.
Um,
Absolutely. Absolutely.
yeah.
And people don't realize how important it is to just not go with that best rate. It's usually an eighth of a percent, right? It's usually an eighth of a
It's
percent.
nothing. I know,
Uh,
$16, $25 difference a month, or like maybe 1,000 in closing costs, where you're like, but 1,000 does mean something to some people, but to a lot
mhm.
of people out here in LA, when you're bringing in 500,000 down, to be like, they're offering me $800 less, or they're going to pay whatever, the appraisal. When it comes to something small like that, I give credits and we should be fine, but it's almost more about like the idea of it. Like,
Absolutely.
you know,
It's the whole package that consumers really need to look at.
yeah,
Not just the bottom line dollars and cents. Even on my side of the fence these days, it's the whole thing. It is the whole
yeah,
package that you need to look at as far as service. Like when I'm listing a property, it does come down to that.
of
It's
course.
what's your fee? What's the commission that you're charging? And oh, I have this guy, he says he'll do it for 2%. And it's okay, what's it? We have to
Yeah,
really talk about what it is, right? Because
yeah.
yes, commission and fees are negotiable, 100% negotiable, but it's more than that. You have to know what it is. Are they just going to put it on the MLS for that?
Mhm.
Or are they going to have you introduced to the best stager in town, know exactly how that property needs to look and present itself to get you the best, highest possible price? What does their marketing plan look like? Do they have the digital marketing background that I have?
Yeah.
I'll give you a story, and we didn't even talk about this at all. But when I first was making the transition from mortgage to real estate, I felt most comfortable doing so in a company that had this brand new idea. It was like a hybrid agent type of role where you would help them with the real estate transaction as their realtor, and you would originate their loan for them. And you can actually do that. If you have both licenses, you can do that as long as it's not an FHA transaction, because HUD, Department of Housing and Urban Development, does not allow that. But a
Right.
conventional type of loan, you can actually do that. There's no conflict of interest. And I was like, man, what a package deal of services. I'm going to knock it out of the park when I say to somebody, okay, I'll help you as your realtor. We'll take some of the commission, the real estate fees, and we'll apply it towards your mortgage as a buy down. We'll get you a better rate and have a full package of services there. The thing that I didn't even think about, and I didn't learn until later, is it's too complex for really anybody to understand the actual value in it. They normal everyday people don't actually understand the value in the packaged services that I was promoting at that
Yeah.
time, in order to see the value and say, oh, yeah, that sounds great. There were a couple that worked out, but it was tough. It was a really difficult sell because the mortgage side is so complex, right?
It is.
People, how many times have you gotten this call? Natalie, what's the rate today?
Every
How
day.
many times?
Gotten it four times today. Yeah.
Right,
Four times today.
right.
Yeah.
So as a realtor, I explain to clients, hey, what you need to know in advance of talking to your lender is there's no the rate today. Okay. There's no mystical, here it is in big numbers. This is what the rate is today. The rate that you're looking at and that is going to be offered to you is going to be based on factors and criteria that are related to credit score and down payment amount and documentation type, and
Yeah.
there's a whole slew of things called risk-based pricing adjusters. Right? You're asking a question that's impossible to answer, and although it may seem like a simple question, what's the rate today? There's no simple answer to that question, right?
Yeah. No, of course.
People have to understand what's
It's
behind
like
it.
going in and just calling somebody and being like, how much is your washer and dryer?
What type? What
Literally
type
like
of
that.
what?
What
What
brand? What
brand? Yep.
what store are you in? I tell
Yeah.
people when they ask, what's your rate? What's your rate? Can you beat this rate? Can you beat this rate? If I bring you a quote, can you beat it? And I'm always like, we're not like Best Buy, right? You don't get to just pull up anything online and come to me and I'm just going to beat it. That's not how it works, actually, because movement is a massive source of information and it is white glove service. It's a totally different kind of thing. We don't have shareholders that get paid. It's one owner. We give 60% of our net proceeds literally to charity and to schools and underprivileged communities. And so it's just a different type of mortgage company. And
Right.
every single mortgage company is different and run differently and cost different amounts of money. And everybody tries to stay profitable. It's been extremely hard the past few years, but everybody tries to stay profitable, which
Yeah,
means
it's a tough space.
different
And
rates. Yeah.
3 years of my mortgage industry experience was, well, actually more than 3 years, my goodness. 5 years of my mortgage industry experience was in a management capacity. So it was managing a P&L for at first a joint venture company where we were in-house with two, no, one, two, three, four different real estate companies. We were in-house. We were the lenders that were in their offices. So I managed that P&L for that
Hmm.
period of time. And then I manage the P&L for a branch. There is that side.
Yeah.
It's all based on business decisions, right? And then appetite, and then there are economics to each of these different loan products and programs, and each even down the loan level in some cases where it's like the lender can't go any deeper. They're going to lose money, and that's just not what a business does. Even a business that gives 60% to local charities, right?
Yeah.
Yeah, at the end of the day, there has to be something left there. And
Exactly.
we do the best we can. But yeah, that's one thing too. It's a lot of people don't understand the aspect, and I explain it to clients all the time as far as appetite. Lenders' appetite for a particular type of loan. It varies different type of lender to different type of lender. Are you with a bank? Are you with a mortgage company? Are you going with a credit union? Are they an online lender, or like we talked about, a chop shop? Or you know what I mean? It's like, what type of lender are you dealing with? What type of lender are you talking to? You may just not be in the right place at all. There's
Right.
because the appetite for that particular lender is just not there in line with what you're trying to do. So that's a topic that comes up on my side these days a lot, as far as let's make sure you're in the right place first,
Yeah,
based on what you're trying to accomplish and what you're trying to do.
totally. Yeah. And how would you say that like the local real estate market dynamics affect mortgages and lending? There's a whole list of things that we could actually say. But
Oh,
like what
so
would you say
much.
was the
Yeah.
largest besides, let's say besides the obvious, which would be when local real estate markets are ticking into a seller market and now values are kicking up because people are trying to get the house. Because this is my number one that affects it. So appraisals get affected, right? Because values get affected because people are willing to spend more when it becomes a seller market. So like you end up bidding more and bidding higher and having to understand that you're willing to spend more on the property just to get it because you're up against 10 other people who want it. But that doesn't mean necessarily that the bank is willing to spend more to get it. So
Absolutely.
like we're
Right.
only willing to spend what it's worth. You're
Hmm.
willing to spend more because to you it's worth more because you just want to get in the house. So you just have to understand like maybe you're going to throw an extra 50 grand towards getting that property so that you can actually secure it. And honestly, you'll have that equity in the property 6 months later or so.
Yeah, which isn't a problem, right? If you have the extra 50 grand
Right.
sitting someplace, but if you're expecting that, oh, we'll just finance the extra 50 grand or whatever portion of that extra 50 grand, then that, yeah, it could be a problem. And we saw that. We saw that unfold with the multiple bids that we experienced when rates were low and it was a seller's market. And it cracked me up during that time period because everybody was like, it's the best time to buy a home. Rates are sub 3%. I just got 2.5 or 2.75. And
Yeah.
it's like,
Amazing.
and I was like, excuse, hold on a second. Maybe it's not the best time to buy a home. It's certainly the best time to sell a home, like ever. We've never seen a
Well, but
better
people were
time to
able to
sell a
get
home.
in for almost zero money. You know what I mean?
Right.
It's like free money at 2 and 2.5 and 2.7, 2.93. Like it was okay almost to spend that extra 75 to 100 grand more when
Because
the
your payment was going to be so
because the
low.
payment is so low. So it still made sense, even though it doesn't make logical sense to spend so much on the value. And it definitely
Right.
pushed our values up, right? Like in 2007, 2006, pushing values up where you don't necessarily want to. But at
Mhm.
least in this case, you're pushing a value up and the payment's the same and it's okay.
Yeah, but it does create difficulties then as far as the appraisal goes.
Exactly.
And I approached this throughout the entire period of time. And even today, I run into some scenarios where a house is just really popular. It's amazing. And
Yeah.
like, of course, who wouldn't want to buy this house? This is the best house that anybody's going to find that's on the market right now. And so you have a lot of interest, and then my buyer, of course, is interested in it and wants to buy it. And so they ask me, like, what should we write? And it's I can't tell you what you should write. What I can do is I can give you all the information you need to make that decision yourself. So the value, things are going to land somewhere in this range, right? Now, aside from that, here's where the comparable sales are. Okay. These are the most important, and these are the sales that the appraiser ultimately is going to use in order to provide an appraisal report and appraised value to your lender. And I will call out, and I do call out to my clients that there's going to be a problem if we go above here. So
Of course.
if we wind up above in this level, there's a high likelihood that we're going to have an appraisal challenge. So we need to prepare for that, right?
Yeah.
We need to talk to your lender about what are our options. Because the last thing you want to have happen is for that to be a surprise to the client or to anybody.
No, of course. You have to talk up front. So the moment you start having this conversation about, hey, we're going to go up, we're going to go higher, we're going to go higher, we need to go higher, you have to really like even get on a conference call with the agent and be like, what are the comps? What do we really feel like this is going to appraise at? What does that number look like? And then
Mhm.
have the conversation with the buyer like, all right, if it comes in 100 grand less, these are our options. You don't even have to bring in any money more down, but it's going to kick from instead of 20% down to 10% down. So you can bring in the exact same kind of down payment, but now we're going to have mortgage insurance. And that's
Right.
what this is going to look like. Or you can do 15% down and cover 50,000 in the gap. Or you can have like just the conversation. If you're still comfortable with those numbers and the extra addition of mortgage insurance in that payment, fantastic. Let's do it with the idea that like hopefully that's your worst case scenario that it comes in 100 grand less or whatever.
Exactly. And at least that conversation was had. So there aren't any surprises with that. And it only leaves the door open for good surprises that, oh my goodness, this is a miracle. The appraisal actually came in. We don't have to
Yes,
worry about any of that, right?
totally. Yeah.
Because it's the unpredictable. That is one of those outside factors that nobody has any control over. We can look at it, a knowledgeable loan officer and well-experienced loan officer, as well as a knowledgeable, hyper-local experienced realtor, can take a look at the data and the comps and really determine, hey, there's a risk here. There's risk that this appraisal is not going to come in. So yeah, it's an important conversation, super important conversation to have in that type of market. You also run into situations when the market flips in the other direction, right? So it's not all good news on the side of, okay, values are decreasing now. The market is
Yes.
shifted. It's a buyer's market. Yay, we're finally here. And in some
Which it feels
neighborhoods,
like we are right now, just a little bit, even though
yeah, in
again, I
some
said it's going to be
neighborhoods.
super short-lived, and it feels like we're almost kicking out of it now. We were in it a couple
Yep.
weeks ago, and now it's almost shifting already. But oh
Yeah.
God, yeah, the buyer's market means yeah.
Yeah, we don't see it. We don't see it as a blanket buyer's market. Can you say California is in a buyer's market now or the United States is in a buyer's market now? It's maybe you can. But the problem is the fact that maybe all of California is in a buyer's market when you look at all of that data is Chatsworth in a buyer's
Mm,
market. No, Chatsworth is not in a buyer's market, right? Because you could still buy a single family home for under $1 million in Chatsworth. You can still buy a single family home that needs maybe a little bit of work and updating for $870,000 for a single family home with a backyard, maybe a pool.
right.
So that particular neighborhood is not a buyer's market right now. It's still strongly a seller's market. So also property type, right? So all of these little things need to be factored in. So it's neighborhood by neighborhood, and real estate is truly hyper local. So you can look at news reports on a national level, take them for what they're worth. Statewide level, sure, even city level. But neighborhood by neighborhood is telling us quite a different story. You have neighborhoods that are definitely in a buyer's market right now in Los Angeles. And then you have a lot of different neighborhoods that are, it's like it never changed. We are deeply in a seller's market. You put something up on the market, it's gone in 2 seconds. Multiple offers,
Yeah,
you
exactly.
know.
It's an
But on the flip
interesting,
side,
yeah.
when it does flip, Natalie, the idea that I was bringing up before is that beware when we get into that. If we get into that, hey, we're in a buyer's market. What happens when the appraisers start to deem that values are declining?
Mm-hmm.
What happens? Right now, that's going to affect, okay, maximum loan to value that could be financed. Maybe gets a haircut of 5%, maybe 10, depending on what mortgage program you're looking at, because on that appraisal report was checked off that box that says declining market values.
Totally.
Be careful what you wish for
Yeah.
at all times, but certainly real estate is not an exception to that.
Yeah, no, of course.
Yeah.
It's such an interesting, uh, I don't even know if interesting, but having a job where every single day it shifts based on how the market decides to open. Definitely, I think it's great. I love staying on my toes. It keeps you on your toes. But
Yeah.
you wake up every single morning and you just don't know what you're offering. You don't know how that's going to affect the client necessarily. You don't know what your day is going to look like. It's an incredible career to be in because and I don't think people understand it. I try to tell my clients it shifts every day. It's like
Yep.
literally putting it on red or black on the roulette table. Nobody knows how the market's going to open tomorrow. You just got to spin the wheel and see. And to give them the idea that like I'm quoting you this now, but that doesn't mean that this is what it's going to look like even in a week from now. So it's hard. I might like this kind of career and being in this market and stuff, but not everybody appreciates that. And I think it's a hand holding that needs to be involved to make people feel comfortable with the idea that it's not comfortable. Like,
It's not. Yeah, it's
yeah,
not. It's an exciting space, and it can be frustrating at the same time
yeah,
because yeah, rates, the cost of whatever given rate you're talking about can change not only on a daily basis, but what about like midday reprices and stuff like that? I mean,
I know it.
the market is always moving. You have two separate markets here. You have what's going on the real estate market, like we were just talking about, and then you have what's going on in the mortgage market, or specifically the market for mortgage-backed securities.
Yeah,
So what's happening on a daily basis there? And just it's completely out of control. And it can feel like it's psychotic at times, right? As far as the
totally.
movements that you see occur. So it's entirely unpredictable. So yeah, it's okay. And the frustration, like you can guide a customer and tell them, look, you're under contract. I would recommend locking this in today because we don't know what's going to happen tomorrow. And then
Totally.
whatever they're reading or Googling or what have you, they may come up and formulate their own advice. Maybe we'll roll the dice and see if we can get an eighth better in the next day or two. And then
Yeah,
the next morning, you see suddenly prices are a 0.5% worse, a half a point worse. And that translates into an eighth or a quarter in the rate that's drifted higher now.
totally.
So it's that part can be frustrating because in our positions, respective positions, we can advise people, we can leverage all of the experience that we've compiled for ourselves over the years for the benefit of the clients that we serve today. And we can do our best to guide them, but we can't make the decisions for them, right?
Of course.
They ultimately make the decisions. And so that is a source of frustration for me from time to time when somebody didn't listen and
Of
oh my
course.
gosh, they didn't lock their rate. So now we're possibly even in danger of that original loan package not being approved because their debt to income ratio is higher. It might, when it was, if it was close to begin with, now we're in escrow. And now
Yeah.
we have a bigger problem than let's try to save a couple of bucks. It's let's try to save this transaction now because rates
Right.
have risen.
Exactly.
Yeah.
Exactly. I will have to say though that you worked in at City,
Yeah.
and that's a really difficult place to have any kind of file that has ins and outs. Big banks are tough when it comes to, oh shoot, we have to shift this out of this and into this. We have to. So definitely, I imagine just because of those things, your stress levels were higher as a loan officer than somebody like kind of me just in an IMB.
Hmm.
Like the
Sure.
conversation of let's just get this to qualify. Normally for us, we're going to just figure that out real quick. Like my ratio kicked from 43 to 49. That's not a problem at all. Not even a problem.
You have options. And I've done
Yeah.
both, by the way. I've done both. So I've
Oh, you
done,
have. Yeah. The difference of a big
yeah,
bank to not. Like if
absolutely.
my ratio kicked to 52 on something today, and I was like, all right, cool, we're gonna do this, we're gonna do that, we're gonna blah 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 blah. Yeah, we're at 49.6. Great, done. There's thank God for that. And I used to work for B of A, so I know very well how that is. And that's why, of course, I left. I just couldn't serve everybody, and I want to be able to serve everybody. And it became
And
very difficult.
that's the one of the four biggest banks that I did not work for, by the way.
Oh, wow. Lucky
So
you. Lucky. I have a client just now that was like, B of A is offering us 5.5 if we put $1 million in the bank. And I was like, phenomenal. Go for it.
yeah,
I hope you don't die during the process. No, I'm kidding,
right.
but like, good luck during the process. They have a clean enough file that I think they'll be fine. They're just standard W-2. There isn't self-employment and the credit is great. They should be fine. But B of A finds the most ridiculous things to deny a file on. The reason I left, the one file I had that just kicked me over the edge where I was like, I'm done, I'm out, was a client gave us their tax returns. And it was at the time that we were just starting to order 4506. So 4506, just for people on the podcast, is something that we order to verify what the IRS has as your transcripts compared to what you gave me as your transcript. So in 2010, 2011, 2009, people were doing a lot of fraudulent things. And so it became part of the process that we had to order the actual transcripts from the IRS to confirm that what you gave us was the same thing that you did actually submit to the IRS. So his IRS transcripts came back different than the return he gave us. And the file was immediately sent to fraud. It was declined, sent to fraud. I didn't even get an email about it. And he did an amendment. He amended his taxes. He simply sent us the wrong ones. It was that simple. It was not fraud. There was no reason to decline the file. He amended. That was it. And he's, oh, shoot, sorry, no, I amended. Here are the amendment ones. And the amendment didn't happen a week before, like something fraudulent was going on. The amendment happened 4 months before. It was legit. I was like, I'm done. And
Yep.
B of A wouldn't reinstate the file. They were like,
Yep.
no, it's fraudulent. He didn't give us the right ones. He's trying to cheat us. And you were like, it was asinine. You were just like, I'm out of here. Like, I cannot work this way. He's a W-2 employee, not to boot, but his 2106 expenses were different. So it's just, what? Anyway, yeah, that's why I
Yep. Yeah.
pieced out. I
It's
pieced out of that.
it goes back to the topic of appetite. So the big banks have their respective appetites and they will enter the market. They'll have a lead product. They'll try to buy in where they're actually losing money on a particular product for a really short period of time to gain market share. They have that kind of firepower and it's going to look really good.
Yeah.
But on the flip side, it's the person at the bank that you're working with. So when I was at the bank, I always used to leverage that statement to say, hey, it's if you have a problem, you're not going to be calling Mr. City, Mr. whatever, Mr. Bank of America, Mr. America. Try calling Mr. America if you have a problem at Bank of America to get your issue fixed. No,
Right.
it's not the bank. Yes, it's a big brand name. Yes, that makes people feel comfortable. But it is the person at the bank or the mortgage company or wherever you're getting your financing transaction done, that they have the experience. They know what they're doing. They're guiding you appropriately along the path of assistance and just knocking it out of the park for you. They're providing that service, right? Somebody
Sure.
like you, Natalie, like your experience and your ability to get the job done for people, I'd assert that you could probably be anywhere and do a phenomenal job. And at the same time, where you are now affords you the ability to have all different products. I used to say when I was new, when I was new on the lending side, why can't we just help everybody? What a statement that was. It's
It's risk. Big
what?
banks don't want to take that kind of risk level.
What did you say, Mr. Sisson? It's like, why can't we just help everybody? It's a valid question. See, so the structure that you have right now is more geared towards that statement. Yeah, why can't we just help everybody? So
Yeah,
you have
so
more answers.
obviously we can't help everybody. I can't help anyone with a 500 credit score, and I can't help somebody who doesn't make any income. And there are of course limitations to
There's
that
limits.
statement in
Yeah.
all different ways, but overall, yeah.
Yeah.
Anyway, so this was lovely chatting with you. Thank you so much for taking the time.
Yeah.
And it was so good seeing you again, of course. Yeah, for everybody on the podcast, all of Ken's information will be below. Like we said, he has like a booming social and a great YouTube that you can go to. He's super informative, as you can see, and lovely and so helpful with his clients. And I know that just as knowing him from the past. I appreciate your time.
Yeah,
And
likewise, Natalie. Thanks for the
yeah,
invitation. It was lovely. Awesome to see you again
so
and
great talking
and
to
to
you.
spend this time.
Yeah,
Yeah.
totally. All right, thank you.
Thanks for listening to Mortgage on My Mind. If you're ready to start your mortgage journey or have any questions, I'd love to help. With 20 years of experience, I make the process as simple and stress-free as possible. Check the show notes for my contact info, and don't forget to subscribe, leave a review, and share this podcast. Until next time, I'm Natalie Salins, here to help make your real estate dreams a reality.